In 2002, basmati rice was sold anywhere between 30 to 50 rupees in India. Now, the same basmati rice costs between 400 to 500 rupees, right? It means if you had 1000 rupees in 2002, you can buy 20 to 33 kgs of basmati rice. But with the same 1000 rupees now, you can buy only 2 or 3 kgs of basmati rice. In this example, the value of money 1000 rupees is decreased by a whopping 90%, right? This is called inflation. Savings do not help you to become rich, friends. They only help you become poor slowly. Because savings return is only 3 to 4% per year, whereas inflation is around 7 to 8% every year. So even if you have sufficient savings now, you need to generate a minimum return every year, which is equal to inflation. Otherwise, the buying power of your cash reduces by approximately 90% in the next 10 years. So, what are the investment options we have for common people? So, first option is real estate. There is no doubt real estate delivered good returns in terms of property appreciation in India. But you should aware of the below risk with real estate. It demands more capital, right? Real estate demands more capital. Number two, legal risk. You know, by any chance, if you get a single case on your property, how many years it will take to resolve in India, right? Next, rental yield is very low in India. For example, if you have a house with a market value of 1 crore and it generates an annual rental income of 6 lakhs, the rent yield would be 6%. But in India, rental yield is only 2 to 3% on an average in most cities. So the second option is fixed deposit. It generates 5 to 6%, which is not sufficient to beat the inflation, right? Also, returns on FDs are taxed in India. So the third option is gold. Definitely gold has delivered good returns in the past, but if you buy gold ornaments, you need to pay making and wastage charges, right? But also it is risky to safeguard your gold ornaments. But definitely one portion of your investment you can invest in e-golds. Fourth option is PPF, Public Provident Fund. PPF, there is no doubt it is decent, but you can withdraw your capital only after 7 years. Also, there is an upper cap of 1.5 lakh for PPF. It means an individual can't invest more than 1.5 lakh in any financial year. Okay. So the last option is stock market. Stock market has delivered good returns in the past. There is no liquidity issue in the stock market. There is no upper cap limit in the stock market. Because of these reasons, I suggest everyone, at least, they should be aware of the possibilities of returns in the stock market and invest at least a small portion of their savings in stock market. How does the stock market work? In the 16th century, the Dutch East India Company deployed many ships to trade gold, masala spices, and silk with many parts of the world. With time, their business has improved and it increased the operation cost of their business as well. So, the company decided to raise capital from private individuals and share the profits back to them in the later stage. This is how the first stock market operations started in the entire world. Let's assume a privately owned company in India is doing a very good business. So now they started getting many projects from different clients. So they need to open many branches across India. Hence they need more capital, right? More investment. But banks don't give loans without any collateral. So they don't have any collateral now. So they can raise funds from the public. This process is called IPO, initial public offer. Many parties are involved in the stock market in day-to-day operation. But this is the simplest way to explain stock market to any common person. A trader opens a trading account. She punches the order with her broking terminal. Zerodha, Fires, Upstock, Grow, Paytm Money are some of the popular stockbrokers in India at the moment. The trading terminal will be connected to her bank account to transfer or withdraw the money. Her broker transfers the order information to the exchange and buys the shares for her from the exchange. All the shares will be stored in the demat account and she can access this information through her trading account. Any profit and loss will be reflected in the trading account. So SEBI monitors the entire activity and adds or changes any rules along with the time. So this is the simplest way to understand how stock market operates in India. Types of activities in the stock market. As an investor or trader, one can do many activities in the stock market. So all these activities can be divided based on the holding period. The holding period refers to the length of the time an investor holds on to a stock before selling it. For example, if you bought XYZ shares on January 1st and sold them on February 1st, then the holding period in this case is 1 month. Based on the holding period, we can identify many types of activities in the stock market, which is nothing but the types of trading. Number 1, investment. Number 2, positional trading. Number 3, swing trading. Number 4, BTST or STBT trading. Number 5 is intraday trading. We also have another type of trading which is called as scalping. It is nothing but taking the trades and closing the trades multiple times in a day. For example, the holding period in scalping varies from 1 minute to maybe 2 minutes, 3 minutes. The holding period will be very less with scalping, but they take more number of trades in a particular trading day. So this is not for beginners. This is only for the experienced traders. I'm just including this because you should know about scalping as well. Each type of trading or investment or swing trading and intraday trading has its own advantages and disadvantages. So it's not about one being universally better than the others. It depends upon the individual preferences, comfort levels and goals. Investment involves buying stocks with the intention of holding them for a long term, typically years or even decades. This approach is less focused on short-term price movements and more on the overall growth potential of the company, making it suitable for those with a long-term outlook and patience. Swing trading involves holding stocks for a short period, less than a month, to capitalize on price swings within a trend. It requires more active monitoring than investment, but less monitoring than intraday trading, making it suitable for those who want to make advantage of medium-term market movements while still having the flexibility of working in some company. Intraday trading, also known as day trading, involves buying and selling of stocks or indices within the same trading day, aiming to profit from short-term price fluctuation. It requires or demands quick decision making, close monitoring of market trends, and a high tolerance for risk, making it suitable for only experienced traders who can dedicate significant time to trading activities. Ultimately, the better type of trading depends on factors such as individual risk tolerance, time commitment to the market, personal mindset, and investment objectives. Support and resistance. Since a few years, this has been happening many times in India. Whenever the petrol or diesel price crosses 100 rupees, news channel starts making a big news on this topic. People start protesting it and lorry association calls for a boycott, right? But Whenever the price comes back to 97 or 98 rupees, everything cools down suddenly and everybody behaves normally as if nothing has happened. Do you know why? Okay. When you visit a shopping mall next time, observe the MRP on each item very carefully. It will be like 999, 499 or 99 or 199, right? Do you know what is the reason behind this? There is a psychological reason behind this. Items are often priced at 499, 99 or 999 due to a pricing strategy called charm pricing. The idea is that prices ending in 9 seems lower to consumers, triggering a psychological effect that makes them perceive the price as more appealing or very affordable. Even though the difference may be very minimal, 1 rupee or 2 rupee, customers tend to focus on the leftmost digit, perceiving 499 as significantly lesser than 500 rupees. Similarly, when the petrol or diesel price crosses 100 rupees, which is a round number, many people start to think it is expensive. But when it comes to 98 or 97 rupees, 2 rupees difference, most people's thinking vanishes immediately, right? Similar logic works in the stock market as well, because the same people trade in the stock market as well, right? For example, this is the Reliance weekly chart. Whenever the price comes to 2000 rupees or 2000 levels, people think it is cheap and hence they are buying it, right? Similarly, when the price goes to 2500 levels, they think it is expensive and they are selling it. One more example, this is Sipla daily chart. You can see that whenever the price reaches 1000 level, people think it is expensive and they are selling it. So in stock market, along with these round numbers, many other numbers play a crucial role in different stocks. For example, this is Tata Motors weekly chart. Buyers entered and bought the shares whenever the price fell to 375 levels, right? This is called as support line. A support line in trading is a price level where the market tends to find buying interest and experiences a temporary halt or complete reversal of a downtrend, often serving as a floor for prices. This is another example. This is Bajaj Finance weekly chart. Here level 56, 56 price level acted as a strong support. Similar logic works for selling as well. For example, this is a Canara Bank weekly chart. In this chart, whenever the price reached 300 levels, people sold their shares and hence this level acted as a strong resistance. So in simple words, a resistance line in trading is a price level where a stock historically had difficulty moving above, often signaling a potential barrier to further price increases. This is one more example. This is Kotak Mahindra weekly chart. 1960 level acted as a strong resistance in this chart, right? Now I will go one step advanced because we should not stay at the same level, right? These support and resistance level can also form with a small angle instead of a perfect horizontal levels. Okay, small angle is acceptable. This is Bajaj Auto weekly chart. This is a proper support trend line with a small angle, right? Whenever the price reached this level, buyers entered the market and their buying power pushed the price on the upside, isn't it? This is Tata Steel weekly chart. This is a proper resistance trend line with a small angle, right? And similarly, whenever the price reached this level, sellers entered and their buying power, pushed the price on the downside, isn't it? In the last module, we discussed the basics of support and resistance. In this module, we will discuss the advanced concept of support and resistance. Friends, first, don't assume a support line always acts as a support line forever. Similarly, don't assume a resistance line always acts as a resistance line forever, because supply and demand change with the time, right? And this causes support or resistance to break. This is Tata Steel weekly chart. This is a strong resistance trend line, right? The price broke the resistance trend line here and rallied on the upside. This is Tata Motors weekly chart. This is a strong support line, right? The price broke the support trend line here and fell drastically downside. Now comes the most interesting part, friends. The price level which acted as resistance in the past can act as a support once the price comes out of the resistance level. Strange? Just look at this example. This is an example, TCS weekly chart. Earlier 1400 level acted as a strong resistance, but once the price breaks this level, it acted as a support, right? This is one more example, PNB, Punjab National Bank weekly chart. Earlier, this price level acted as a resistance, right? And after the breakout, the same level acted as a support. The same logic works on the opposite side as well, support and resistance. For example, the price level which acted as a support in the past can act as a resistance once the price breaks the support level. For example, this is the Titan daily chart. 2300 level acted as a support in the past, right? But after the breakdown, the same level acted as a resistance, right? This is Sun Pharma weekly chart. After the breakdown, the same trend line which acted as support in the past, now acting as a resistance. So this is the most interesting part. So once there is a support, if there is a resistance line, after the price breaks the resistance line, because that level carries a crucial importance. So the same level, there is a high possibility of acting as a support in the future. Similarly, if there is a support trend line, if the price breaks below that support trend line, the same price level there is a high possibility of acting as a resistance in the future. So always remember this. So remember two things. One is support and resistance are very important, but at the same time, the support and resistance line can break, and if it breaks, the price will give a very, very good move. Friends, in this video, I will explain TradingView and important features of TradingView and important hacks related to TradingView. Okay, so TradingView is the most popular tool or charting pattern used by most of the trader across the world. So basically, this is how it looks like. So right now, by default, I'm in a daily time frame. So what it means is one candle represents one day actually. For example, today is 26th April and this is the 26th April chart. So this is the open value in red candlestick pattern. This is the close, this is the low, and this is the high. So in green, this is a bullish candle, which means this is the open price level, this is the close price level, this is the high price level, and this is the low price level. So you can get all this information. You can see here if you place your cursor here and you can check the references here. It gives everything here. So you can also change the time frame. For example, this is a daily chart, right? You can change the time frame. You can go to 15-minute time frame here. So which means one bar represents 50 minutes. See, this is 15, 30, 15, 15. So 245 like this. Or you can go to higher time frame like weekly chart. So this one bar represents 1 week. Okay. Or you can also go to some other time frame like this, 15-minute, 30-minute, 5-minute, 3 minutes, 1 hour, 2 hour. Okay. So this is how you can change the time frame. And now You can also change the chart types. Actually, there are many chart types. By default, TradingView provides candlestick chart. You can also go for different chart. For example, this is a line chart. In line chart, what happens is it connects the closing level of that particular period. So this is the daily chart, right? So it takes the closing level of daily chart every day, it connects it. So this is how it draws line chart. To get more clarity, you can go for line with markers. So this is the closing price. This is the closing price of the previous day, previous day, previous day. So it connects like this. So you can also use this, or you can also use bar chart. Bar chart was very popular once upon a time in US. So you can use bar chart, or you can also use many other charts, because TradingView provides almost all types of charts. You can use Renko charts, you can use Ekeneshi charts. There are so many types of charts. But I suggest, if you are a beginner and if you are intermediate level trader, I suggest to use candlestick chart pattern, because it is very visual, very easy to understand. Okay. Now indicators. Friends, I have a separate module on indicators, and I will explain many strategies using indicators. But this is the information where you can plot different indicators. For example, let's say I want to plot RSI indicator. Type on RSI, click on Relative Strength Index. This is the indicator. By default, it highlights 70 and 30. But I suggest to go here and change, and you can use for 60-40, because 60-40 is the very good reference level. Above 60 we can expect a bullish view, and below 40 we can expect a bearish view. See, for example, I have changed this. See, what I was trying to say is, whenever the RSI is above 60, you can expect a bullish view. See here, from here to here it was bullish, again here to here it was bullish, and similarly below 40 we can expect bearish move. See, for example, if you come to the current period, it is below 40, right? From here it was below 40, from here it is downtrend, it is in a proper downtrend, right? So this is how you can use RSI indicator. You can close this, or if you want to use some other indicators, again go here. Let's say you want to use Bollinger Band indicator. So type BOLL, you will get it here. Click on Bollinger Bands. See, this has plotted the Bollinger Band indicator. Let's say you want to hide the indicator. Let's say you have developed an indicator, or you are using some indicator which you don't want to reveal that indicator name to the people, which means click on the small icon. It hides the indicator name, so nobody will come to know about what indicator you're using there. So time being, I will close this. Now if you want volume information, again you can type under volume, you will get volume. So what volume means? 1 by 1 cell is 1 volume. So on the downside, you can see the volume information for this particular stock. Okay, so this is about volume. Now let's say this is Infosys stock. This is a listed company in India, and Nifty is the market index in India. Let's say you want to see how Infosys has performed with Nifty. So click on this plus compare icon, type Nifty. So what it does is, it plots a comparison chart. For example, this this color line, it's very close to orange. This color line is a Nifty. Okay, Nifty chart. This is Infosys. So what it indicates is, compared to Nifty from here to here, Infosys has not performed very much, right? It is in a downtrend, whereas Nifty is in a sideways to upside trend. But in this period, from here to here, Infosys performed better compared to Nifty. Again, from here to here, it performed better. Okay, you can compare like this, or you can also compare this with some other stock as well. So this is how compare option work. And now let's support and resistance. Some people, they struggle a lot to draw support or resistance trend line. For them, there is a beautiful indicator, support, dynamic support resistance. If you take support resistance dynamic V2 developed by Lonesome the Blue. Okay, this is an indicator. So what it does is, it draws the support and resistance trend line automatically for you. It's pretty decent actually. I will not say it 100% accurate, but it is pretty decent. See, it plots the resistance level. Even if you get into lower time frames, it automatically plots the support and resistance lines for you. See,
this is a resistance. So this is support broke here. See, this is a resistance. So it draws the line automatically for you. So if you are struggling to draw support or resistance trend line, you can use this indicator. I will go to daily time frame, then patterns. Okay, you can also shortlist candlestick patterns like this. For example, let's say you want to study bullish engulfing candlestick pattern. So what you can type is engulfing, it lists the bullish engulfing. So what it does is it highlights where there is a bullish engulfing. See, this is a bullish engulfing candlestick pattern. This is a bullish engulfing. So whenever it finds a bullish engulfing pattern, it highlights like this. Similarly, you can also plot any other candlestick pattern. Like say, for example, hammer. So hammer bullish. So whenever it finds a bullish hammer pattern, it highlights. See here, there is a small hammer. Okay, so this is how you can identify and find out candlestick pattern. The most important feature, according to me, is the stock screener. Okay, so here, if you click on stock screener, if you go to filters, it gives hell lot of options actually. Okay, so one is descriptive. Let's say you wanted to shortlist open is equal to low stocks. So click on open, select equal, select low. See, it what it does is it shortlist all the stocks on that particular day which displayed open low. Similarly, you can short open high stocks. Okay, again, if you go to financial, you can shortlist the stocks from fundamental, EBITDA, net margin, return on equity, price to sales. So based on fundamental factors also, you can shortlist all the stocks. But the beauty is technicals. So in technicals, you can shortlist stocks like anything. For example, let's say I just explained RSI 40-60 rule, right? RSI above 60 is bullish, RSI below 40 is bearish. So what you can do is click on search filter, select type RSI. See, we got the relative strength index. So let's say you want to shortlist all the bullish stocks, which means RSI above 60 is bullish stocks, right? Select RSI, select above or equal, then select 60. So what it does is, and enter, what it does is it will shortlist all the stocks which are in which RSI is above 60. For example, these are the stocks in which RSI is above 60, which means these are all bullish stocks. You can see here Colpal, you can see the RSI level here 66, 67, 72, 71. Okay, so similarly you can shortlist the bearish stocks. For example, you can go to filters, so you can go here. So instead of above or equal, you can select below or equal. Instead of 60, you can select 40, enter, close this. You can see this is the bearish stocks, Anura, Spark, Fisher, Spectrum. You can see the RSI level here. For example, if you go to Anuras, you can see it. For example, if you go to Anuras, see, this is in a downtrend actually. Okay, so this is how you can use TradingView. Still, TradingView offers lot of features actually, but these are all the basic and necessary and important features I've explained. This one is also useful. For example, you want to draw a trend line, you can click on this. You can use this trend line. You can use either horizontal line or you can use trend line. So if you click on this, you can also draw a trend line like this. This feature is also helpful. And these are some of the important features in TradingView.
Now comes the most interesting part. I'm sure you might be confused now about how to handle or process this support and resistance line concepts, right? And especially how to take trades using this support and resistance line concept. I will clear out your confusion. The confusion is there is a support trend line. Now the price is near the support trend line. How do we say that price stops its fall here and it will go upside from here? Because just because the price is near the support trend line, we should not assume it will take support there and it will go upside from there. We need to wait for price confirmation or bulls confirmation at the support level. before taking a long trade there. Advanced traders and professional traders can just look at the price action there and they decide whether the price will go upside or not. But beginners and intermediate level traders can depend upon candlestick formations or candlestick patterns to get the confirmation, because it gives very solid confirmation. So I will explain three bullish candlestick patterns first, and then I will explain the three bearish, powerful candlestick patterns. First bullish pattern is bullish Marubozu. Bullish Marubozu is a big green candle or buying candle without any wicks on the either side. Basically, this highlights the presence of bulls, right? And there is a high possibility of price going upside when we get a bullish Marubozu. Please note, Marubozu candle should be a big candle compared to other candles on the chart. So in addition to this, full flat Marubozu, a small buying wick at the bottom of the bullish Marubozu candle is acceptable because it also indicates buying, right? So number second bullish pattern is bullish engulfing. Bullish engulfing pattern consists of two candles. So first candle is a small bearish candle. Second candle is a big bullish candle that engulfs the range of the first bearish candle completely. It engulfs the first candle completely. So this highlights the presence of bulls, and there is a high possibility of price going upside when we get a bullish engulfing pattern. So number third bullish pattern is hammer pattern. So as the name suggests, this pattern looks like a hammer actually. So it consists of a small body and a long wick on the downside. So friends, please note wick should be a minimum 2 to 3 times, compared to the body. Okay, if the body size is this, wick size should be like this. So this highlights the buying intention, and there is a high possibility of the price going upside when we get a hammer. So all these patterns can be used as bullish confirmation patterns at the support trend line, friends. So now let's look at some of the examples. So this is Bajaj Finance weekly chart. And this is a resistance trend line, right? There is a resistance trend line. So recall the resistance acting as a support after the breakout. You remember that part, right? Now the price displayed a breakout here, right? It did a breakout here. The price took support at the same level, isn't it? And interestingly, it displayed a bullish engulfing pattern at the support line and then moved upside, right? So this is the bullish price confirmation. This is the candlestick confirmation, or this is the positive candlestick confirmation. So after the formation of this pattern, one can plan a long trade above the high of the bullish engulfing and keep a stop loss below the low of the bullish engulfing. It's very simple. So in that case, there is a high possibility of getting success in your trade. One more example is Nifty weekly chart. This is the resistance trend line earlier, which acting as support now. See here, a bullish Marubozu pattern formed here, and the price rallied upside after that, isn't it? So one can plan a long trade above the high of the bullish Marubozu, keeping a stop loss below the low of the bullish Marubozu. Let's look at one more example. So this is Bank Nifty daily chart. This is a support trend line, isn't it? So exactly at the support line, we can see a hammer candlestick pattern, right? So it was a good idea to take a long trade above the high of the hammer, keeping a stop loss below the low of the hammer, isn't it? Now we will look at some bearish candlestick patterns, because for short trades bearish candlestick patterns are very important. So first bearish pattern is bearish Marubozu. It is similar to bullish Marubozu but on the other side, right? It consists of a big red candle or selling candle without any wicks on the either side. So this highlights the presence of sellers and there is a high possibility of price going downside when we get a bearish Marubozu. Once again, please note, Marubozu candle should be a big candle compared to the other candles on the chart, right? Then only it is, it gives the confirmation and power actually. In addition to this, a small swelling at the top of the bearish Marubozu is acceptable because it indicates selling. The small wick at the top, it also selling wick, right? So it's acceptable. The second bearish pattern is bearish engulfing. Similar to bullish engulfing, it consists of two candles, but first candle is a small bullish candle. Okay, it's a green candle, small bullish candle. Second candle is a big bearish candle that engulfs the range of the first bullish candle completely. So this highlights the presence of the sellers who are dominating and there is a high possibility of price going downside when we get a bearish engulfing pattern. So the third bearish pattern is bearish pin bar. It consists of a small body and a long wick on the upside. Once again, please note, wick should be minimum 2 to 3 times bigger compared to the body. So this highlights the selling intention and there is a high possibility of price going downside from here. So once again, we will look at some of the examples. So this is Reliance weekly chart, right? And this is the resistance trend line. Now, if you consider this one candle, it is bearish Marubozu pattern, right? But if you consider the prior candle as well, it will become a bearish engulfing pattern, isn't it? So it is like a double confirmation. So after these, bearish patterns, the price went downside, right? So one more example is Aro Pharma weekly chart. There is a resistance trend line here and the price displayed a few bearish pin bar patterns and after that it witnessed a good fall, isn't it? Friends, there are thousands of candlestick patterns in technical analysis. But it is difficult to study all of them and remember all of them and recall and apply them in the live market, isn't it? The above discussed are the powerful, candlestick patterns and they occur very frequently in all the time frames. So these candlestick patterns are more than enough for beginners, even intermediate levels traders to manage your trades. So to know more about candlestick patterns, if you want to study further about candlestick patterns, you can read Japanese Candlestick Charting Techniques book by Steve Nissen. Assume you have a beautiful sister who is married to a police officer. Both are living happily and they have a kid who just turned 18 in the last week. She expressed her desire to learn how to drive a car to her father. So now your brother-in-law has 3 cars. One Tata Punch car, second Hyundai Verna car and third Audi Q7 car. Now your brother-in-law asks you to teach her to drive using an Audi Q7 car. How do you feel? There is no doubt Audi Q7 is an excellent car to drive and roam around, right? But do you think is it a good idea for a beginner to learn to drive using an Audi Q7 car? No, right? Tata Punch is a better car to learn driving for beginners, isn't it? It is a small car, it is safe and easy to handle compared to Verna and Audi cars. Do you agree with my logic? I'm sure you will make an effort to convince your brother-in-law about this, right? You can see similar things even in stock market trading. Basically, there are 3 trading instruments in stock market: equity, futures and options. Equity is like a Tata Punch car. easy to understand and learn, but gives less returns compared to futures and options. Now, the second option is futures, is like a Hyundai Verna car. It is little complicated compared to equity, but gives good returns compared to equity only if you are right. But you will also lose major losses due to leverage if your trading ideas goes wrong. Now, third one is options. Options is like an Audi Q7 car. Highly complicated compared to equity and futures. There are some possibilities of high returns if used correctly, but definitely this instrument is not for beginners. Unfortunately, most beginners start their trading with options directly and lose their hard earned money, and they blame about the market. So, it is better to understand how these trading instruments work in the real market. Please note, this example and explanation is only to understand this instrument and not to suggest to trade in options. One day, three traders want to trade the same stock Davis Lab but in different trading instrument. For the explanation's sake, we assume all of them take the trade at market open, that is at 9:15 a.m. and close the trade at 3:30 p.m. in Indian market. First case is trader E who decides to take a trade in equity or cash market. So this is Davis Lab spot 15-minute chart on 12th April 2024. It opened at 9:15 a.m. at 3739 level. It closed at 3:30 p.m. at 3770 level. Assume all three traders have 1,35,000 rupees in their trading account, just for the explanation sake, okay? So trader E can buy 36 shares. So the overall profit made by trader E is 1,000 rupees, 116 rupees or 0.82% on his trading capital. The second case is with trader F who decides to take trade with futures. This is Davis Lab futures chart on 12th April 2024. It opened at 9:15 a.m. at 3755 level. It closed at 3:30 p.m. at 3778 level. Trader F can buy one lot of Davis Lab futures. One can check the margin requirement in the span calculator. All the brokers give this information. So as on 12th April 2024, you need to have 1,34,366 rupees to buy one lot of Davis Lab futures contract. So in this case, one lot is equal to 200 shares of Davis Lab. So in simple words, trader F will buy 200 shares or one lot with the same capital of 1,35,000 rupees. So the overall profit made is 4,600 rupees, which is nothing but 3.4% returns on the trading capital. In the third case, trader O decides to trade with options. In options, we have call options and put options. People buy call options when they anticipate an upside move and they buy put option when they anticipate downside move. So I don't want to complicate too much at this point in time. So I will explain the trade directly. So trader F takes his position in 3750 strike price call option. So he can buy 2014 quantity from his 1,35,000 capital. So the total profit made by trader O is 46,322 rupees, which is nothing but 34% of the total trading capital. So now let's revise the total profits made by all these three traders from the same trading capital. It looks like trader O is intelligent and talented, right? But this is a cherry-picked example to explain how these trading instruments work in the live market. So options trading, especially options buying, carries inherent risk that traders should be cautious of. Buying options involve the risk of losing the entire premium paid, as options have expiration dates and can expire worthless if the underlying asset does not move as anticipated. Just think what would have happened if the price moved in the opposite direction. Trader E would have lost small money, trader F have lost medium money, and trader O would have lost more money, right? So the overall conclusion is equity carries less risk and less reward. Future carries medium risk and medium reward. Whereas options carry more risk and more reward. Besides, please note options is a versatile trading instrument that can be used in different ways like hedging or speculation, or we can also generate constant income through covered call strategies like that. So it all depends on how individual and how he uses options in his trading. So this is all about the different trading instruments we have in stock market: equity, futures, and options. Friends, take any market, cash market or commodity market or forex market, price can move in upside direction or downside direction or sideways direction, right? Any market should move in any one of these direction. Apart from these three direction, any market will not go in any other direction, right? Now the thing is, let's say it's going upside. The thing is, price will not go upside in a single straight line, right? It will give small pullback and go up, small pullback and then go up. It gives small pullback and go up. While going down also, it gives a small bounce and then it goes down. It gives a small bounce and then goes down, right? So we can study all these variations using Dow theory. Okay, this is very simpler and effective manner to study these variations using Dow theory. So Dow theory is proposed by Charles Dow. Basically, he wrote series of articles in his journal, Wall Street Journal, and explained Dow theory in many articles. In this video, I'm trying to explain the entire Dow theory in simpler and effective manner as much as possible. So according to Charles Dow, price can move in three trends, uptrend, downtrend, and sideways trend. Now let's study one by one in detail. Okay, so number one is uptrend. Let's say the price has started its movement from here. So this is the swing low and this is the swing high. This is the starting swing low and this is the starting swing high, right? Now when price starts moving, okay, it makes an higher low, okay, as compared to the previous swing low, the original swing low. It makes an higher low, right? Then it makes an higher high as compared to the previous the starting swing high. It makes an higher high, right? So in an uptrend, price keeps on making higher low, higher high, higher low, higher high, higher low, higher high. So in other words, when the price keeps on making higher high and higher low, we can say that the price is in an uptrend. Now let's say you are holding some stocks in your portfolio. If one of the stock is displaying this pattern, it indicates it is in a uptrend and you should try to, or you should aim to carry that particular stock, because you never know where the price will go, right? So starting from 100 it can go to 1000, 2000, 3000. So there is a possibility. So until price displays these characteristics, higher low, higher high, higher low, higher high, you can conclude that that particular stock is in a strong uptrend and you should try to ride the profits as much as possible. Okay, now this is an example of uptrend in Titan monthly chart. Okay, let's say this is the starting point and this is the starting swing low and this is the starting swing high, right? Now compared to the starting swing low, this is a higher low, right? Then compared to the starting swing high, this is a higher high, right? See, price kept on making higher low, higher high, higher low, higher high, higher low, higher high, which means it is in a strong uptrend. If you are holding this stock, means
you should try to write the profits as much as possible. Okay, so this is one example. So one more example is Bajaj Finance weekly chart. Okay, so this is also in a strong uptrend. Now, see, compared to the starting swing low, it kept on making higher low, higher high, higher low, higher high, higher low, higher high, right? So it is in a strong uptrend. Once again, if you have any, these kind of stocks in your portfolio which are displaying higher low, higher high formation, you should try to hold that particular stock and try to write the profits as much as possible. Now, downtrend. Okay, I hope uptrend is clear, right? Higher low, higher high, higher low, higher high, higher low, higher high. Now downtrend. So in downtrend, what happens is, let's say this is the starting point, just for explanation sake. Now this is the swing high, right? And this is the swing low. In downtrend, what happens is, compared to the previous swing high, it makes a lower high, right? This is a lower high. Now compared to the previous swing low, it makes a lower low. Okay, lower, it made a lower high, it made a lower low. So in downtrend, price keeps on making lower high, lower low, lower high, lower low. In other words, if the price is making lower high and lower low, we can conclude that it is in a downtrend. Now, let's say you have a stock in your portfolio which is displaying this particular pattern, lower high, lower low, lower high, lower low formation. Do you think is it a good idea to hold the stock? Comment below. Let's see whether you understood the concept or not. There is a stock in your portfolio, it displaying lower high, lower low, lower high, lower low pattern, and is it a good idea to hold this particular stock in your portfolio? Just comment below. Let's see whether you understood this or not. Now, I will take an example. So this is Nifty weekly chart. So this is the, you can see, right, compared to the previous swing high, it made a lower high, lower low, lower high, lower low, lower high and lower low, right? So it is a perfect example of a downtrend. This is one more example, Adani Enterprises weekly chart. Again, compared to the starting swing high, it is a lower high. Again, compared to the starting low, swing low, it is a lower low, right? It kept on making lower high, lower low, lower high, lower low. So it is in a strong downtrend, right? Now, high up downtrend is also clear. Uptrend, higher low, higher high, higher low, higher high. Downtrend, lower high, lower low, lower high, lower low. Now in sideways trend, this is the third trend. In sideways trend, what happens is price, this is a high, this is a low. What happens is price will keep on making the same highs, same lows, same highs and same lows. Okay. Now don't assume, or don't think that it should make the proper swing high, same low. For example, if the 1000 is the high, don't assume exactly at 1000 it will turn back. Okay, small, very little deviation is okay. So because in market there is no 100% accurate, right? So but just an example, approximately if it going like this, then it is in a sideways trend. So this is an example for a sideways trend chart. So in VRL, it is in a sideways trend in this particular time period, right? It kept on making similar highs and similar lows. This is perfect example for a sideways trend chart. Now let's say you are driving a car in a road. One car is driving or going ahead of you and the right indicator is on in that particular car. Now, do you think that car will take U-turn only? Think for a moment. Now, the thing is, if there is a car going ahead of you, if the right indicator is on, the car can take U-turn. There is a possibility. There is no doubt about it. But one more possibility is car can take right turn also, right? There is second possibility. Now there is a third possibility, car can go straight as well, because some stupid drivers have less consciousness about their indicators. They will switch on the right indicator, they will drive straight. They will switch on the left indicator, they will keep on driving straight, right? There is a possibility actually. Now we should apply this common sense. How do you see, for example, when I'm driving a car, if the indicator is on, straight away we unconsciously we do this. So even if the indicator is on, straight away we don't assume he will take a U-turn, right? Or he will take a right turn. We will see whether that wheel is turning, whether the body of the car is turning in that direction. If the body is turning in the direction, it gives a confirmation that definitely he will take a either right turn or U-turn, right? So that's what we do as a experienced drivers. So we should take the essence or lesson from this experience. We should try to apply in price chart as well. Now, when the price is in a strong uptrend, if the price makes a, this is an uptrend chart, right? When the price makes a lower high, this is a previous swing high, this is a lower high. So when the price makes a lower high, don't assume, never ever assume price will begin with a downtrend. Recall the car example. It can take U-turn, which means it can go downtrend. It can take right turn, which means it can go into sideways mode. The price can get into sideways mode, or it can go straight as well. So there is a possibility of price going straight as well in an uptrend. So the formation of one lower high is not sufficient enough to declare end of uptrend. I will repeat once again, friends. The formation of one lower high or one lower low is not sufficient enough to declare the uptrend is over. Then this is an example. This don't trust my words. I always say this. Don't trust or believe whatever I'm going to say, because you always back test the concept. You verify that concept on a chart, then only you can believe it, right? So this is an example. See, in this particular mode, the price is in a strong uptrend. Do you agree with this? This is one part. And now it made a lower high, right? It made a lower high, but still it's a proper lower high, right? And still price went upside, right? So this is the perfect example of what I'm going to explain. Okay, what I explained in the previous slide. Now your question is, then Indra, you are saying lower, higher low, higher high, higher low formation is a formation of uptrend, characteristics of an uptrend. Then how do you identify the end of uptrend? Let's say I wanted to exit my stock at the top. Then how do I identify end of uptrend? Friends, one honest admission, nobody can exit at the top. Let's say a stock went from 100 to 1000 rupees. Nobody can exit at 1000 rupees. Okay, this is very true actually. So only two people can exit at the top. One is God, another one is liar. So nobody can exit at 1000, but we should try to identify a close point which is very close to the top actually. So in the previous slide, I saw it, one lower high formation is not sufficient for the exit. Now you have a confusion, right? Then how do we identify a close point which is very close to the top actually? Now it is using simple concept, 1 2 3 pattern, how to identify end of uptrend. Let's say you have a lot of stocks in your portfolio. How do you identify end of uptrend for those particular stocks, whether to carry it or not? The pattern is very simple, friends. It is 1 2 3 pattern. Okay, let's say the price is in a strong uptrend. Number one pattern is it makes a lower high formation. The price is in a strong uptrend. It makes a lower high formation. That is number one. Second pattern is it makes a lower low formation. Second pattern is it makes a lower low formation. Third pattern is price breaks the lower low level. Okay, when the price breaks the lower low level, you can conclude that it is end of uptrend. Okay, I'll repeat once again, friends. When the price is in a strong uptrend, first it should form a lower high formation. It is an indication, like a right turn indicator in a car. So it is a warning symbol. Definitely we should be conscious and careful about it. Formation of lower low, which means tire is also turning towards that side. Second warning. Third warning is break of lower low, which means car completely turned this side. So this indicates uptrend is over, right? This is a common sense. We should apply the same common sense via 1 2 3 pattern to exit our stocks at the up in an up, I mean when the uptrend is over actually. Okay, so again, don't believe my words. You can see yourself in the chart. This is an example of Tata Steel daily chart. Okay, the price is in a strong uptrend. Do you agree with this? Now price made a lower high, right? Pattern 1 formation. Price made a lower high. Next, price made lower low. Okay, price made lower low, right? It is very clear. Price made a lower low. Pattern 2. Next, price broke that level, right? Price break the lower low level, right? So that is pattern 3 completion. Okay, so this indicates uptrend is over. So if you are carrying any stocks, if the stocks displayed this 1 2 3 pattern, lower high formation, lower low formation, and price also broke the lower low, indicates end of uptrend, you should close that particular stock as much as possible, because you never know when the price, I mean how much fall the stock will witness. So it indicates the 1 2 3 pattern formation, lower high, lower low, and break of that level indicates something is going in wrong with that particular stock. You have to exit. If you observe the chart very carefully, after the break of that level, the same level acted as resistance 2-3 times, right? So that level is very, very crucial. Okay, this is end of uptrend. See, when you see a danger, you should always exit. Okay, so if you can't see a danger after some time, you can always board that particular stock, right? You can always buy back. But once you see the end of uptrend, it is better to exit that particular stock. So this is one more example, Sun Pharma. Again, it is a weekly chart. See here, from here to here, the price is in a strong uptrend. Do you agree with this? Next, at the top, it made lower high. Number 1 pattern. It made lower high. Next, it made lower low. Number 2nd pattern. It made lower low, right? Next, price broke that level. Pattern 3 formation, right? Price broke that level. So it indicates end of uptrend. So if you are carrying any stock which displayed this particular pattern, means you need to close the trade. Again, here, it acted as a resistance once the price broke that level, right? Now, you can say, Indra, end of uptrend identification is good. We have learned it. But to exit at the end of uptrend, we should be already in trade, right? You should already carrying some stocks to exit at the top end of uptrend, right? Then how to identify those stocks, or how to identify end of downtrend, so that you participate in that particular stock and you participate in the rally and to write the profits. Once again, the logic is very simple, friends. The same 1 2 3 pattern, but on the mirror side. Okay, I'll explain in a simple manner. Let's assume a particular stock is in a downtrend. First, it should make higher low. This completes pattern 1 formation. Next, it should make higher high. This is pattern 2. It should make higher high. Then the price should break the higher high. This confirms pattern 3. So first pattern, higher low formation. This is a warning symbol, which means something is going wrong. Second is higher high formation. It indicates it is confirmation. 3 is breaking. So the break of higher high indicates it is going upside, right? So this indicates end of downtrend. So downtrend is over, or you can also conclude it is the beginning of uptrend. Once the price displays this particular characteristics, you can take an entry. So this is an example of a ACC weekly chart. You can see here the price is in a strong downtrend, right? So it is in a downtrend. Here it made higher low. So this is pattern 1 formation. It made higher high, right? This is pattern 2 formation. Once the price broke that level, this is pattern 3 formation, right? Which indicates end of downtrend or the beginning of uptrend. So your entry should come when the price breaks and closes above the higher high level. That should be your entry point, and your stop loss should be the starting swing low. Okay, that should be your starting swing low. Now you might think, or you might get a doubt in your mind that the stop loss is very wide in this particular case. It happens, friends. Dow theory is especially designed for investment to hold your stocks for more duration. If you have the mindset capability to hold your stocks for more than 6 months or 1 year, then only you should use Dow theory in daily charts or in weekly charts. Okay, so your entry should come at or above the higher high level. When the price breaks above the higher high, your entry should come, and when the your stop loss should be below the low of the starting swing low. Okay, this is one thing. We'll see one more example. This is JSW Steel daily chart. So this is in a strong downtrend, right? Again, see here, the price made a higher low, right? The price made a higher low, pattern 1 formation. Next, it made a higher high formation, right? This is pattern 2. It made a higher high. This is pattern 2. Next, price broke that level. And the price broke that level, it indicates end of downtrend or the beginning of uptrend. Okay. Again, you see here, it acted as a strong support. There is a big bullish engulfing candle which came at the same level, right? So that level becomes automatically very, very crucial. So your entry should come above the higher high. Okay, your entry should come above. Whenever the candle closes above the higher high, your entry should come, and your stop loss will be below the swing low. Okay, this is very simple. This is a rule actually. Now the simple conclusion is, see friends, Dow theory, you can also use Dow theory in lower time frames, but it gives valuable insights to market trends, behavior, how the price is going, whether the price is going upside or downside or sideways. If the price is making higher high, higher low, higher high, higher low, means it is in a strong uptrend. If the price is making lower high, lower low, lower high, lower low, means it is in a strong downtrend. If it is making same high, same low, same high, same low, means it is in a sideways trend. Now you can also this Dow theory is highly beneficial for investment and long-term trading on daily charts and weekly charts, but you can also use this in lower time frames as well. But you take any strategy, whenever you get into a lower time frame, there is a high possibility of noise, right? So you should have a mechanism and risk management, money management in place to beat that noise. That is very important. So next, always don't risk more than 2 to 3% of your capital per trade. Okay, what it means is, let's say you take a entry at the break of higher high and your stop loss is at the low of the swing low. Now if the price comes back and takes your stop loss, means you should not lose more than 2 to 3%, friends. If you have 1 lakh rupees of capital, if that happens, you should not lose more than 2 to 3%. That is the important point. That's very, very important actually. Now, once you take the position, it is better to trial your stop loss below the low of every swing low. For example, let's say you've taken a trade. Earlier, your stop loss will be the low of the starting swing low, right? Price starts moving upside with higher low, higher high, higher low, higher high, right? Then it is makes sense to trial your stop loss below the low of every swing low. Why? Because there are two options. Safe traders who want to ride the entire move, they can follow the end of uptrend concept, the 1 2 3 pattern formation to exit the trade. Very conservative traders, who want to exit at very safe point, then they can follow, they can trial their stop losses below the low of every swing low. In that way, they can exit very close to the top. Next, always backtest the ideas before implementing in live market. So I always say this, let's say you have understood one trading concept. That doesn't mean that it is went into your head and you will be able to take trades based on that particular strategy 100%. Why? Because our mind is a very complex system actually. It has a lot of ideas. When you don't back test a particular trading strategy, you don't get 100% conviction and confidence in that particular system. So once you take a trade, if there is a some random movement, your mind will generate lots of ideas. Hence you will get a lot of confusion whether to follow that particular strategy or not in live market. But in offline market, when you back test a strategy against at least bare minimum 100 charts, you will get little confidence and conviction to use that particular system.
See friends, I'm not using RSI in a traditional manner and I'm using RSI in a different manner. So the traditional usage of RSI is overbought and oversold and divergence, right? So we will be focusing more on overbought and oversold, not on divergence, because divergence is altogether a different topic. So we'll discuss about overbought and oversold and we will make a different rule for overbought and oversold scenario. So basically overbought means whenever the RSI is above 70, the traditional definition says it is overbought situation and we should look for a short trade. That's what it says. Similarly, oversold. So it says whenever the RSI is below 30, it says if it is in oversold zone, we should look for a long trade. So this is the definition of overbought and oversold scenario. But the problem with overbought and oversold situation is, so in this case, overbought. In an uptrending market, RSI can stay above 70 for a long duration. If you take a short trade in this case, there is a high possibility of taking stop losses for many number of times whenever the RSI is above 70. So this is the failure of overbought scenario. Similarly, failure of oversold scenario. So whenever the RSI is below 30, if you take a long trade, there is a high possibility of taking stop losses for many number of times in a downtrend market, right? This is where overbought and oversold scenario will not work effectively in the long run. Friends, I always say one thing, don't believe any idea or quote or strategy without validating it. Even if I share some idea, don't believe it as it is. Please try to validate it on the charts. So for example, now I explained RSI overbought and oversold concepts, right? So I say overbought concept doesn't work properly because in uptrending market, downtrending market, it always fails. See here, for example, this is 70-30. So either say, see from here, so RSI crossed above 70, right? So if you think it is a overbought situation and if you try to take a short trade here, in this case Nifty, here, so everywhere you would have lost money, right? Here this is a bearish indication. If you would have taken a short trade here, again you would have lost money. Here there is a bearish indication. If you would have taken a short trade here, again you would have lost money, right? So this is one thing. And I will take few charts with different time frames and different stocks also. So then only you can believe it. So this is Nifty, for example, daily charts. So I will go to something else now. For example, we will go to Reliance. And Reliance Pay, we'll go to some other time frame, maybe hourly chart. Okay. So see here, for example, here. Okay. Here it crossed above 70, right? If you would have taken a short trade here, somewhere here also, you would have lost money, right? So you might argue, okay, if you would have taken a short trade here, there would have been a profit here, right? So you might argue like this. But instead of taking a short trade, if you would have taken a long trade here, see the movement here and the movement here. It is very small, right? So you would have taken a short trade here, stop loss will be here. No, it has not even given 1:1 risk reward, right? So this is where this overbought concept is not a good idea. So I can take one more example. Probably Grasim gave very good move today. So I'll go to Grasim Industries. Maybe we'll go to 50-minute time frame. Okay. So either say देखिए, for example. So from here it crossed above 70, right? If you would have taken any short trade here, you would have lost money, right? Here also, if you would have taken a short trade in this red candle, you would have lost money, right? Not till here. So it's a proper uptrending market today in 15-minute time frame. So if you would have taken any short trade at this point of time, you would have lost money, right? Probably I will go to something else also. ITC. ITC is very famous stock for most people. We'll go to daily time frame. You can see here, for example, so it went below 30 here, right? So if it have taken a short trade here, for example, long trade here, you would have lost money, right? Here. So it नीचे ही जा रहा है price, है ना? So if you take a long trade by thinking RSI is below 30, it is oversold zone, you would have lost money, right? So the same concept work in a similar manner in different time frames as well. For example, if you go to maybe hourly time frame, you can see here, okay? If you see here,
it came down below 30 here, right? So either say if you would have taken a long trade, you would have lost money, right? If you would have taken even a long trade here, stop loss keeping below this, it moved only little bit, right? It went only this much and you can't exit at the top, right? So it only moved little bit and again a niche aa gaya. So even if you go, a little ahead also, for example, we'll clear this. Now here also the same logic, right? See here it came down below 30, almost here. So if you have taken a long trade, it moved only little bit, but again it came down actually. So this overbought oversold concept is not a good idea. You can verify yourself. Don't believe whatever I'm going to say. You verify not in one chart, two chart, 5 chart or 10 charts. You verify this concept in 100 charts with different stocks in different time frames. So then only you will get some clarity about this concept. Friends, in my opinion, 40-60 rule is the best way. So what is 40-60 rule? It is very simple. Anything above RSI above 60 is bullish. Suppose if the RSI reading is above 60 means we should consider it as a bullish. Anything below RSI 40 value is bearish. Suppose if the RSI value 40 के नीचे trade हो रहा है तो हम consider it as bearish. Okay. Anything between 40 to 60 is sideways. Okay. It is very simple. RSI above 60 is bullish. RSI below 40 is bearish. Anything between 40 to 60 we can consider it as a sideways market. So this is one simple example. आप इधर से देखिए. So RSI crossed above 60 in this case. See, price stayed in uptrend, right? So until RSI stays above 60, we can consider it as uptrend case. Similarly, इधर देखिए. So RSI came down below 40 in this case. So इधर से इधर तक, whenever RSI stays below 40, we can consider it as a downtrend. Okay, here इधर से sideways start हो गया ना. So इधर से इधर तक देखिए. So RSI stayed between 40 to 60 here, except this little bit. Again, it पूरा sideways पे चला गया ना. So anything above 60 is bullish. Anything below 40 is bearish. In between 40 and 60 is sideways market. Okay, so this is one more example. The beauty of RSI 60 concept is, in most cases, it aligns with the breakout actually. ये प्रॉपर ट्रेंड लाइन है ना. वी हैव कनेक्टेड दिस, वी हैव कनेक्टेड दिस, वी हैव कनेक्टेड दिस. सो इस कैंडल पे देखिए RSI 60 ब्रेक हो गया. इधर देखिए 65.9 है. सो पुराना कैंडल पे इट डिडंट क्रॉस 60. इस कैंडल पे इट क्रॉस्ड अबव 60. सो इधर ट्रेंड लाइन ब्रेकआउट भी हो रहा है. इस कैंडल में RSI 60 भी ब्रेक हो रहा है. सो इधर देखिए बाद में मूव आ गया ना. ओके, सो दिस आर फ्यू सिंपल एग्जांपल. वी विल चेक सम मोर एग्जांपल. ओके, डोंट बिलीव एज इट इज व्हेनेवर आई से समथिंग. We will check some more example. So probably what I do is I will go to, for example, I will go to money rediff. So where we can check the trending stocks. For example, this is Nifty. I selected NSE. We look at the gainers. Okay, Grasim Industries. Anyway, I've already checked the chart now. See, Bajaj Finserv is the next one. We'll do one thing. I will mark only RSI 60 and 40. I will remove everything. Then it is very easy to check. I go here, inputs पे, so style पे I use only RSI. I don't use all these things. RSI middle band नहीं चाहिए. Upper band is 60. This is what I was referring. And lower band is 40. This is what I was referring. I will remove everything else as well. Okay. So अभी देखिए. So this is pure RSI and we have 60-40, right? So the first stock is, anyway, I've already shown Grasim Industries. We will check Bajaj Finserv. I will retain in 15-minute time frame. If you don't know, 15-minute time frame is the best time frame for intraday trading. So in this, I will go to Bajaj Finserv. Bajaj Finserv. So आप इधर से देखिए, this is the first candle 9:15. You can see the timing here. This is the 9:15 candle. आप देखिए 15-minute टाइम फ्रेम है. ये आज का है कैंडल है. यू कैन इजीली ड्रॉ ए ट्रेंड लाइन हियर, राइट? यू कैन ड्रॉ ए ट्रेंड लाइन लाइक दिस. ओके, सो दिस इज अ प्रॉपर ब्रेकआउट कैंडल, राइट? सो RSI वैल्यू देखिए इधर. फॉर एग्जांपल इधर डेफिनेटली इट इज 60. ओके, कैन सी इट हियर. फॉर एग्जांपल देखिए इधर, so 915 कैंडल पे RSI is 69, इधर देखिए, you can see it here. So RSI is 69, the previous one is 54. So आज का first candle है, this also align with the first candle theory in my case. Okay, so this is a clear breakout of the resistance trend line. It is also a clear breakout of previous day high. RSI crossed above 70, है ना. So आप देखिए क्या हो गया, RSI stayed above 60 for the complete day, right? See here, it is completely bullish move. Do you agree now? Okay, not one example. We will check few more example. Okay, so I will go to money rate once again. Bajaj Finserv तो हो गया. We will go to Bajaj Auto now. Okay, so I will go to Bajaj Auto. Bajaj Auto. So आप इधर देखिए, what happened is, the first candle. So this is the first candle, 72 RSI. This is previous day last candle, it is around 54. So this candle pe we got very big move on the upside. It crossed above 60. However, the price went upside a little bit and it went into sideways. Immediately RSI bhi 60 ke niche aa gaya. Even if it have taken a long trade somewhere here or here, it is a minor loss or a break even trade, right? Okay, so definitely not a major loss. Any small loss is acceptable, but it is not a major loss scenario. So now we will go to the one more example. Bajaj Auto हो गया. Now Bharti Airtel. We'll go to Bharti Airtel. Bharti Airtel पे ये 50-minute चार्ट है ना. आप देखिए, ये फर्स्ट कैंडल है. दिस इज प्रीवियस डेज लास्ट कैंडल, दिस इज फर्स्ट कैंडल. फर्स्ट कैंडल पे इटसेल्फ वी गॉट अ वेरी वेरी बिग मूव एक्चुअली. ओके, सो ये RSI 74 है. So it is a very big move. Usually we should try to avoid when we get a very big move in one candle itself. But still, if you take a long trade here, you should keep your stop loss here, right? Because there is no other way. Still, ये ऊपर चला गया ना. Now until RSI stayed above 60, it went upside. Okay, so this is one thing. And we go to one more chart. For example, ICICI Bank भी है. We'll go to ICICI Bank. ICICI Bank पे, okay, इधर देखिए, it's also very clear. So this is previous day's last candle. RSI was 56.4, right? ये आज का फर्स्ट कैंडल है 65 है. इधर देखिए, so RSI इस कैंडल पे 65 हो गया. Okay, ये पुराना वैल्यू दिखा रहा है, it's 65. So it's stayed above 65 and for the entire day it stayed above 60, right? और मूव देखिए, it is pure trending upside. So this is what I'm trying to say. In a pure uptrending market, RSI stays above 60 for a long duration. So until price stays above RSI 60, I mean when until the RSI stays above 60, we can consider price is in a proper uptrend. Okay, so that is one thing. We can also check the downtrending thing. For example, if you go to downtrending here, downtrend पे गए तो Coal India, we didn't get very good move today because Nifty is in a proper sideways mode. So Coal India move आ चुका है. If you go to Coal India here, if you go to Coal India here, so आप देखिए, so इस कैंडल पे RSI का वैल्यू 46 है. ओके, देखिए इस कैंडल पे 43.28 है. You can see it here. You can see it here. So 43.28 है, इधर 46.3 है. इस कैंडल पे देखिए 34 हो गया. ओके, so in this candle, price broke almost all the support trend line in this candle pe. RSI b, it came down below 40, right? Then see this, what happened. So this is what I'm trying to say, friends. Anything, if RSI stays above 60 means it indicates a strong uptrend. If the RSI stays below 40 means it indicates a strong downtrend. Anything between 42 and 60, even in this case, either 40 to 60 पे रह गया इधर. So इधर देखिए, it's proper sideways mode, right? So anything between 40 and 60 is a proper sideways mode. Friends, whatever I explained till now, I got all these ideas after reading this book, The RSI, The Complete Guide by John Hayden. So a few years back when I read this book, I felt very, very happy, and I verified all the concepts on the chart. It looked really good actually. So I thought that it is very easy to make money in intraday trading after using this strategy or after applying this strategy. But it is not that easy, right? There is a catch actually. The catch is, see, for example, I started using like this Nifty 50-minute chart, then RSI apply kiya maine 60-40 rule. Now if you notice here, there is a small spike above 60, right? RSI 60, then wapas niche aa gaya. If I would have taken a long trade at this point of time, it would have made a loss, right? Similarly, ये 40 के नीचे भी कुछ टाइम तक चला जाता है, then it will bounce back. Again here RSI went above 60 little bit and then came back. Okay, here as well. So here as well. So here as well. So either B. Okay, either B. So in many cases this is like a false signal or a false indication where RSI goes above 60 little bit or it goes below 40 little bit and it bounces back. So when I started taking long trades or short trade at this point of time, I started ending up with many false or unnecessary trades. Okay, so this is what happened when I started taking trades on this topic. So you can check Bank Nifty also. So again in Bank Nifty, this kind of false signal strength is quite less. Here RSI 40 ke niche chala gaya, then it bounced back. Here it's only once RSI went above 60 and it went back, right? So this is where I used to get a lot of false trades. So then I was discussing this with a friend. So basically, great minds discuss ideas, and average minds discuss events, and small minds discuss about people, right? So when I was discussing this problem or this issue with a friend, he suggested one thing. So for example, this is Nifty 50 chart along with an RSI indicator, right? So what he suggested was, instead of using RSI, he suggested using a moving average on RSI. Okay, RSI indicator is one thing, so we can apply a moving average on RSI. So if you would have done this, it automatically avoids all those false signals, right? So this is what happened. See here also it avoided the false signal. So in many cases, it avoids the false signal. So basically what we can do is, I will delete this. I will delete here as well. So if you go to indicators, I will apply RSI. So basically when we plot RSI and TradingView, it gives many parameters actually. All those things are not necessary. So what we can do is, so first we remove the middle band. So we'll make it 60 here, upper band. We will make it 40, the lower band. Then we don't need Bollinger Bands. We don't need bullish label. We don't need bearish label. RSI background fill, it's okay, it is fine. Overbought gradient is not necessary. Bollinger is not necessary. No, all these things are not necessary. Then हमें चाहिए RSI based MA. Okay, recently TradingView started giving this option, plotting MA on RSI. So we can go here. So we can highlight this in black and we can we can make it thick so that it is evident very clearly. Then if you plot this, so if you go to any intraday trading, for example, इधर से देखिए, so from here RSI MA went above 40, so इधर से uptrending पे है, it didn't came down below 60, right? Okay, so if you go further as well, here देखिए, so RSI, normal RSI went above 60 for a small time and then it came back. So if it have taken a long trade here, at the break of this, it would have been a loss, right? But MA avoids this false signal, right? Here also देखिए, ये 40 के नीचे चला गया, but MA avoids this issue. Here, there is no, it came down below 40, it is fine. Because we can't avoid 100% of the problem. So basically, okay, I think we need to change the settings. So I think this is 14 MA. So what we can do is just 5 MA is enough. By default, it plots 14 MA. So we can use 5 MA. That is more than enough. So it will avoid many problems like this. See? So this is a small spike. It MA avoided the issue. This is a small spike above 60 RSI MA avoided this issue. Okay. See here, small spike above 60, RSI MA avoided the issue. So whenever there is a small spike in RSI, see here, MA avoided the issue. So this MA works beautifully well and it avoids many unnecessary trades. Here it didn't avoid. It is fine because we can't give 100% fix for everything. At least it avoids 70 to 80% of the unnecessary trades. So you can also verify in Bank Nifty. For example, if you go to Bank Nifty, I will remove these lines. I will upload these lines to share my daily analysis in my Telegram channel. So if you are interested, you can join my Telegram channel. The link is in the description. So here also, if you see here, it went below 40 little bit. Okay, but RSI MA avoided the issue. Again, if you see here, it went above 60 for some time. RSI MA, it's not there, so we would have avoided the long trade. Again, so we can go on and down like this. So we'll go to some other stock. For example, I think it came. We can continue here. See, RSI MA above 60. RSI is above 60. MA avoided the issue. So in many cases, we can avoid unnecessary trades. We can also check some stocks. For example, if you go to Bajaj Finance is one of the famous stock in India. See here, RSI is above 60, but RSI MA avoided the issue, avoided the fall signal. Here it didn't avoid. It is fine. That's where we need to make a separate rule for the entry and the exit. Again, RSI is above 60 little bit here, but RSI MA avoided the issue. RSI is above 60 here, RSI MA avoided the fall signal. Okay, so this is where RSI MA avoids the signal. So what I suggest is, you can go to the settings, you can disable RSI itself. RSI MA is more than enough. You can disable RSI, you can disable everything. You can mention only 60-40 and RSI background fill is okay. If you start using this with a proper settings, it will work fine. For example, what we can do is I will go to Money Rediff as of now. So let's see as of now what are the stocks has given good returns. I will go to NSE. I will go to gainers. So abhi we can see Power Grid Corporation 3.2% de chuka hai. So I will go to Power Grid. So Power Grid here. See here, abhi RSI 60 MA break or it's not yet broken. There is a gap up, all those things happen. That's why signal is not generated as of now. If you go to Grasim Industries, if you remember, yesterday also Grasim Industries gave a very good move. Grasim Industries. See here, it's already above 60, so it is a bullish thing. ONGC abhi tak nahi move aa chuka, it's only 1.4%. You can check anyway. ONGC 1.6, it's still in between. So there is a, see here RSI MA stayed between 40-60 here. Idhar se idhar tak dekhiye, it is completely sideways move, right? So whenever it is in between 40-60, we can easily avoid the move. We can verify this stock only. For example, RSI MA, you can see the levels here. So RSI MA is 59 in this candle. The next candle it is 60.91. Okay. So from here, if you have taken a long trade, along stop loss somewhere here, see it is a good profit. So it went upside until RSI MA stayed above 60, right? It is a good move from here to here. Similarly, इधर थोड़ा fall signal आ गया, but still okay, it is okay. इधर से 40 चला गया, थोड़ा down move आ गया, then it went into sideways. इधर भी it came down, it went into sideways. Either there is a fall signal even from RSI MA. Sometimes it happens, we can't avoid all the signals. So इधर से देखिए it went above 60, इधर से up move आ गया इधर तक. Then इधर देखिए I think I should minimize this, we should expand this. Okay, see here इधर से 59 था, इधर से 60.04 चला गया. So इधर से it went upside, right? No, it went upside till here. So we can use RSI MA like this, but definitely it is better to have a proper entry rule and stop loss rule based on the different types of trading.
See friends, when you take a trade, there are many factors which plays a crucial role to make money in trading. It is not only about the entry. So there are 5 parameters which plays a very, very crucial role to make profits in trading. So number 1 is entry. So where do you take the entry? How do you take the entry? What are the entry rules? So this is the first important thing. So unfortunately or fortunately, I have noticed one thing. Most people, including beginners or intermediate level traders, so they will be able to manage the entry. Okay, they will make the entry fine. So entry is only one aspect. So next one is initial stop loss. So after you taking an entry, where do you place the initial stop loss? That is the second most important thing. So after that, the third important thing is trial stop loss. How do you trial your stop losses? So if you place your initial stop loss as it is, if you don't trial with the price movement, you will not be able to encash the profits, right? So how do you trial that stop loss is the most important thing. This is where intermediate level traders and beginners will struggle a lot. Okay, so the fourth important thing is exit. How do you manage his exit? What are your rules for exit? For example, whether you exit after 1:2 risk reward, or you exit at an important resistance level or support level, or you exit is only dependent upon trailing stop loss until the trailing stop loss hits. Keep trailing the stop losses. So how do you define your exit? That is the most important thing. So the last important thing is your risk management per trade. For example, how much you risk per trade. So ideally, you should not risk more than 1.5 or 2% of your capital per trade, which means if you have 1 lakh rupees, even if the price comes back and takes your stop loss, you should not lose more than 1,500 rupees or 2,000 rupees maximum per trade. So even if you continue like this, so even if you fail 10 failed trades, you lose only 20,000, right? 2,000 into 10. So this is, it's only 20% of your capital psychologically hit, right? So this is where all these 5 rules are very, very important. So whether you pick scalping or intraday trading or BTST trading, defining all these rules are very, very important. I will make a small attempt to define all these rules for different trading methods. See friends, now I will talk about entry. Okay, entry is the first important step. Let's say इस candle पे RSI 60 break हो रहा है. Let's say if you are an intraday trader, you need to fix into 50-minute time frame. A 50-minute time frame पे you need to wait until the closure of that particular candle. Okay. If you are a scalper, you can depend upon 3-minute time frame or 5-minute time frame candle, and you need to wait until the closure of that particular candle. If you're a BTST trader, you can pick 30-minute time frame or 60-minute time frame, and you need to wait until the closure of the candle. If you are a swing trader or positional trader, on daily charts, you need to wait until the closure of the candle, right? Let's say you are an intraday trader. अभी 50-minute time frame पे candle close हो गया. So RSI MA is above 60. So in that case, you can plan a long trade above the high of the breakout candle. Okay, this is the candle in which RSI MA is closed above 60. You need to take the entry only above the high of the candle. Okay, don't take in between. Once the RSI MA is above 60, once the candle close happens, don't take the trade, long trade immediately. Okay, you need to wait until the price breaks the high of the candle, or you can place a stop loss buy order above the high of that particular candle to take a long trade. I hope this is very clear, right? If by any chance, if it gives a very big move, okay, very big move on the upside, then it's okay. You can leave the trade and you can look for any other trade because market will be there forever, right? So that is the important thing. That is all about entry point. For stop loss, you can place the stop loss below the low of that candle. If the candle is very small, you can place the stop loss one candle before the low of the one candle of the candle. Otherwise, at the breakout candle itself, you can place your stop loss below the low of that particular candle. Okay, I hope this is very clear. Now, regarding the trailing stop loss, okay, so this is where most people struggle a lot because entry लेने के लिए there will not be much problem. For initial stop loss also there will not be much problem. For trailing your stop loss and for exit, lot of emotions come into your mind, right? Because it comes from your past experiences, because you might have carried a trade with a proper stop loss. It went upside, you would have seen a good profits.
it came back, it would have taken your stop loss. So you would have thought that if I would have trialed my stop loss, I would have made money. On some other day, I would have trialed your stop loss, price touches your stop loss, and then it will goes on the upside. So that's also coming to the picture, right? These kind of experiences will bring a lot of emotions in your mind. So this is where you need to define a proper rule actually. Okay, for both trial stop loss and for exit. Let's say this candle starts going upside after your entry, price starts going upside. So in that case, what you have to do is you should use either a moving average. Suppose if you are an intraday trader, you can use 21 or 20 period moving average, or you can use ATR, or you can use super trend indicator to trial your stop loss. So this is very, very important, friends. I will show it on the charts. For example, if you are an intraday trader, this is RSI EMA. So what you can do is you can go for EMA, average moving average exponential. You can use 21 period. 21 period, it acts as a support and resistance for intraday trading in 50-minute time frame. I will go to settings, instead of 9, make it 21. You can see this. Okay. So let's say I will take an example actually. Let's say you've taken a trade here, in this candle. So immediately you can follow the stop loss. So this is 21 EMA. You can follow this EMA to trial your stop losses. Okay. So this is, it hit your stop losses here, right? So you can use this moving average as a trailing stop loss method, or you can use ATR. Okay. So ATR, it comes like this. Before applying ATR, I will close the moving average. So you can use ATR. So average true range is the indicator. So basically it calculates the volatility of the movement. So you can use ATR in 2 times actually. This is ATR 14 period. So you can use ATR 2 times. Like this is a 14 period ATR. So if the current value of ATR is almost, for example, 1.5, you can use either 3 or 3.5. Let's say you've taken an entry here, 280. Let's say you've taken an entry at 280. I'm just taking an example, okay, 280. Then you can place your stop loss like 277 or 276. You can place your stop loss. So that is 2 times of ATR. Some people get confused how to use the ATR. So because it is not available on the price chart, right? So for them, it is very simple that they can use super trend indicator. If you go to super trend indicator, so super trend indicator also uses ATR. So what you can do is go to settings. So ATR is there, so instead of 10, you can make it 14. So instead of factor 3, it is a multiplication, whether you should use 2 ATR, 3 ATR like this. Instead of 3, you can use 2 or 2.5. 2.5 ATR is best actually. So you can use like this. Let's say you've taken a long trade here. So you can trial your stop loss using this. With this, you can trial your stop loss. You will be able to write the profits. You will be able to write the entire profits. For example, here also, let's say you've taken a long trade. You would have written the profits till here, right? So same logic applies, whenever you got a trending move actually. Okay. So here also, so let's say you're taken a long trade here. See, you can write your profits through super trend indicator here like this. So if you, it would have taken your stop loss somewhere here. Okay. So in this way, you can use either moving average, super trend or ATR to trial your stop losses. Next, the most important part is exit. Okay. There are different types of exit, and one should pick one format or one type of exit based on 2 things. One is which suits his personality, and another one is it should be profitable. Okay. So we should do back testing properly based on that particular type of exit, and then you should ensure that that type of exit complements his personality. Okay. So there are different types of exit. One is risk reward exit. So let's say 1:2 risk reward exit. Let's say you've taken a risk of 10 points. Then your exit should come at 20 points. Okay, 1:2 risk reward. So this is one type of exit. Another type of exit is trailing stop loss. So there are a few traders who decides to trial their stop losses according to ATR or according to super trend indicator. Like that, they will not exit at any point of time. They want to write the profits of the complete trend. Okay, that is another type of exit. So one more type of exit is support and resistance. So there are some traders who holds the trade with a proper TSL technique, and they exit at a next resistance level. Okay, so this is another type of exit, and one more type is partial exit. What some people does is they exit 50% of their position at 1:2 risk reward or 1:1.5 risk reward, and they trial the stop loss for the remaining 50% position. So these are the four different types of exit technique. So you can pick anything. Okay, you can pick either risk reward based exit, or you can pick TSL based exit, you can pick support resistance exit, or you can pick partial exit. Personally, I prefer partial exit because I prefer to exit 50 to 75% of the position at some important level, and then I will carry the remaining position. So you can pick any one of the exit, but ensure you back test this strategy, with the historical data, with 5 years data, 10 years data. You back test it, and then you should ensure that the strategy is profitable. Okay, so that is the most important thing.
Friends, trading success comes to those who combine knowledge with discipline, making informed decision and sticking to their strategies even in violent markets. So consistency and patience are the engines that drive long-term profitability in the exciting world of trading. Now, there are three factors are important to get success in trading. Number one, technical analysis. Number two, money management rules. And number three is trading psychology. Whatever we have learned till now comes under technical analysis. Below are some of the important points under the second point, which is money management. So first is risk percentage. Decide how much of your trading capital you are willing to risk on each trade, typically ranging from 1 to 3%. For example, if you have 1 lakh rupees in capital and choose 2% risk per trade, you will risk 2000 on each trade. Second, position sizing. Determine the size of your positions based on your risk percentage and the distance to your stop loss. For example, if you're risking 2000 rupees on a trade with a stop loss of 20 points, then you will buy 100 shares, right? Third is stop loss orders. So always use stop loss orders to limit potential losses on your trades. For example, if you buy a stock at 50 rupees with a stop loss of 48, you risk 2 rupees per share and place a stop loss order at 48 rupees to prevent any damage. Fourth is risk to reward ratio. Aim for favorable risk to reward ratio on every trade, such as 1:2 or 1:1.5 or higher. So this means that every point you risk, you aim to make at least 1.5 to 2 points in profit. For instance, if your stop loss is 200 points and your profit target is 400 points, your risk to reward ratio is 1:2. By following these money management rules, we can control our risk exposure, protect our capital, and increase the likelihood of long-term trading success. The next important thing is trading psychology. Improving trading psychology is crucial to get success in market, friends. Here are few tips or points to enhance your mindset. First, develop emotional awareness. Recognize and understand your emotions while trading. Be aware of how fear, greed, and excitement can influence your decision and learn to manage them effectively. Second, maintain discipline. Stick to your trading plan and rules when you face market fluctuation or tempting opportunities. Discipline helps you to avoid impulsive decision and stay focused on your long-term goals. Third, practice patience. Trading is not about making quick profit, friends. It's about consistency and discipline over time. So be patient and wait for high profitability, high probability and high profitability trading setups that align with your trading strategy. Accept mistakes and learn from them. Every trader makes mistakes. So instead of dwelling on losses or missed opportunities, View them as a learning experiences. Analyze your trades objectively, identify areas for improvement, and adjust your approach accordingly. Next is manage expectation. Friends, set realistic goals and expectations on your trading journey. Understand that trading involves both wins and losses, and focus on continuous improvement rather than seeking 100% perfection. So, my final point is meditate every day for 30 minutes to 1 hour to improve your trading psychology and to improve your decision making ability.